Hey everybody, just doing a quick AMA, see if anyone had any questions. Anyone want to come up, put their hand up, ask a few questions. Hope you've had time to go through videos 1 to 7. Starting to see some great results. Obviously, we've got the hearing tomorrow, and the processes look like they're being updated in order to accommodate the strategy. So that's a really nice thing to see. Just wanted to come on briefly, see if anyone wanted to come up, ask any questions, any requests. I know I was limiting all the videos to 1 hour, which was pretty efficient, and we had a big queue after each one. So just wanted to see if anyone had any suggestions or questions. Oh, that's my doorbell ringing. I'm going to let someone up, but let me grab that. I think that's my food at the same time. Let me just open the gate. Give me 1 second. Open gate. Okay. Just going to let a couple of you up that had your hands up. Normally takes about 10 seconds to propagate. Hey everybody, sorry, just had the doorbell ring as soon as I did that. So just seeing if anyone had any questions they wanted to ask. I think we let one person up, but it looks like he's having some internet issues propagating. I've got no content today, so unless people have questions, it's going to be a quick one. Normally when the first one comes up, everyone's got more. Mary, how you doing? How's the whole steering groups going? Here we go. We've got Celsius loans, always entertaining to get things kicked off. Celsius loans, how we're doing? I can see that the negotiations are starting.
Hey, Simon. Yep. Thank you. And thanks for doing another hosted space. It's also always recorded that people can go back and listen. Negotiations are going good. And I did see you put out that playlist of all 7 videos with 7 AMAs. I think that's perfect for directing people for where to go. I think there is really broad consensus across the different ad hoc groups. It just, obviously the devil's in the details and just working out. If there's going to be a sell token ad hoc, I've advised kind of the sell holders for how they did a ton of work with Otis, the sell token proposal. The thing is, what happens on Twitter and the presentations that happen on Twitter are very different from what happens with regulators and what happens in the courtroom. I think we saw today the hard work that he's really a pure earn depositor, but he's really helpful for all depositors in Manny Main. I know yourself as well, Simon, but Manny Main specifically worked very, very hard with the UCC to adjust the bidding procedures in court to allow an equity bid that would include equity in a new co. So a lot of the work is getting done that is not on Twitter. It's getting done in the courtroom. It's not done on Twitter Spaces with epic debates and battles. It's done behind the scenes.
Yeah.
So I would just say, if for the people that are representing the sell token, that I would love to see some type of BNB token or a sell token. Simon, you have tons of experience with regulators and the ability to make that happen. But in a new co, if there's going to be a utility token, it's got to get passed in court and it's got to get passed with regulators. That's all I'll say with that. But thanks a lot.
Okay, cool. Yeah, Manny's a bit of a soldier. Like, he's been doing some amazing stuff. So we got Zach here and Mary. Mary, did you want to ask a few questions or say something?
No, you just were asking about, the website, how it's coming along.
How's it going?
Yeah, it's going really good. We actually talk amongst each other. We meet every day. We're putting it together so we can highlight everyone's ideas on there. all these charts where it's one central location that everyone can find things very easily and get as much information as possible, because as we all are saying, time is of the essence, and we want to make sure we're utilizing our time wisely. So very encouraged to see everyone coming together, and hopefully we'll have the outcome that we all want. So thank you so much for putting on the space, Zach and Simon and everybody else that's putting in all their efforts.
Okay, what's the web? Has it got a URL? Is that live yet?
It should be live here within the next 24 to 48 hours. We already bought the domain. We have everything going on, but we'll make the announcement. Hopefully BitShack is out there and he can give you more information. Alex also has been a very, very huge part in putting this together and getting all the pieces and the pages together, so they can give you a little bit more information and give you the URL for it.
Which Alex?
Sorry, Alex, I don't know if I see you. I'm actually on the interstate in 5 o'clock traffic, so I can't
Okay,
even look at
but
my phone right now. So I
we're not
apologize
saying
for.
Alex Machinsky. We're saying another Alex, right?
No. It's actually a girl. It's actually a girl.
Oh, okay.
She's helping out. She's very, very, very good at what she does. So I'm sorry, I can't give you more information. I'm just driving. I can't look at my phone right now.
Awesome. Yeah, to protect yourself, don't crash. Hey Zach, did you want to say something?
Hey, yeah, a couple things on the cell token debate, if you will. I think there's a bit of a misunderstanding of what we're actually arguing about. I don't think the current cell token holders, which I'm one of, and I'll just speak for myself here, are saying that we absolutely must have the cell token itself in the new co, or that we must have a utility token, period. I think what we're kind of yearning for is, one, to make sure we get credited for those coins, but two, I think many people would be open to the option of getting that credit in a different form, looking at equity or looking at maybe a mixture between the two of in-coin and equity, because I always saw cell token kind of as a way to exposure to Celsius's growth, right? And I think that many of the large cell token holders were of the same opinion, in just my experience. So I wouldn't get so caught up on the regulatory idea. We have to have a utility token. It has to do this or that, because utility tokens are very tough. I agree with you there. But I think if we can find a way to convert that token value into something besides Bitcoin and ETH, I think you would have a lot more people attracted to not having a token in future implementations.
Yeah. Why do you think the cell token holders are probably easier to coordinate because they're the most active people on Twitter? I don't think there's most of them are on Twitter, so they've been involved in the conversation. So the people,
right.
The other creditors are less active. So yeah, I think the right way to go about this is to it doesn't have to be official, but form the equivalent of a cell token ad hoc group and kind of advocate for what you want. I know it was. I think it would just be it'd be easier, and then try and follow like some of the steps that the other ad hoc groups have been doing. Maybe that's not yourself, maybe that's someone else. But if someone wants to take on that mission and try and coordinate the best result, because the heads of the ad hoc groups are really starting to make progress. And I think if we could have started all again and we understood the whole process from scratch, that would have been the way to do it from the beginning, I think.
Well, sure, yeah, but I mean, we've all learned a tremendous amount in the last 3-4 months. So this education has been priceless in its own right, and I think again that existential threat of getting bought out by someone we don't want to get bought out is forcing us to be more and more collaborative, and I think you see that as well.
Yeah, absolutely. It's been one heck of a journey. Thanks, Zach. Okay, anyone else want to come up and say something, ask any questions?
Yes, can you hear me?
Yeah, can you hear?
Yeah. Hey, Simon, thanks for all that you do. I've been following you from early on now, and really impressive work on putting this difficult task into a concise and understandable way for us to consume it. I have a question. I think it was video 6. I'm an accredited investor, my wife and I, and I think you mentioned something about accredited investors being able to get involved before non-accredited investors, and I think you made a reference to them like signing up to something that they're getting involved now. Can you elaborate on what that was? I wasn't sure if I'm missing out on something.
Yeah, sure. So deep into the process now of setting up this structure, and the devil's always in the detail. We've got so many professionals on the case, and the challenges are immense to distribute this to 300,000 to 600,000 people. This is not a cheap process by any stretch of the imagination. We're going to be launching a securities offering on Bank to the Future for high net worth investors and accredited investors. I want to be really clear. That's just us raising in order to implement implement a growth strategy. So this has no impact on the end result that we can try and deliver for non-accredited investors. I just want to be really clear. A securities offering is where we would disclose everything about BF Global. And just due to the heat, we've got several license applications pending, and some of those are just coming through now that would allow us to work with retail investors outside of the US. But we don't want to utilize those at this stage because we think that it's just such a sophisticated security at this stage that we'd only want to do that with accredited and high net worth. But don't get confused between us being able to implement the solution, trying to use the bankruptcy code if we can get through the process, which won't be restricted just to accredited and high net worth. So what I was saying is, if you are an accredited and high net worth and you're interested in getting exposure to equity and BF Global, we will be doing a securities offering to implement a new growth strategy. Historically, we've always been funded by our own community. We've always focused on profit and getting exposure to the industry. We've never gone for a high growth strategy. So we're going to be seeing if we can go for a high growth strategy. Just sign up, verify and certify your account, and we'll send you more details.
Terrific. Thank you.
That's okay, pleasure.
Okay. Hi, I think I'll go. Day long, is that okay?
Yeah, go for it.
Hi, Simon. Thanks again. As we discussed before, I come all the way back from the BSave day, so I eat, live, and breathe the yield stuff and the loan stuff.
Yeah, what was your involvement in BSave?
I work with Jonathan. There were only two of us, so I was Jonathan's right hand man who spoke and wrote English well enough.
Are you a co-owner?
I wasn't a co-owner. I was literally helping him out, almost like an internship. But I was getting paid so much interest that it didn't matter because I had a nice little 6-figure dollar-wise stack pretty early on, and I'm like, I don't want to sell this thing, but I'd love to get interest on it, and I'd sell the interest, and I've been doing that for years. So to say that I eat and breathe this stuff is a.
When did we do your funding round? Was it? Do you remember?
This was 2016, 2015,
so
2016.
Were you before?
It was prior to Bitfinex. As far as I remember, BSave and Magna were the only two names in the game.
Yeah.
So I think Salt was pretty early.
The Salt idea happened at Satoshi Roundtable 2016, and that was in Mexico, and that was in January. That was always January 2016.
We were well before the Bitfinex hack because we were affected by it. I remember that.
Yeah, I remember. Then we did the BSave funding round, and then you guys built the yield account, and then obviously the user experience on top of it.
Yeah, Celsius bought the code base, which is great. Awesome. We didn't make any money because they just bought the code base for the debt we had, but that's okay. But the point I'm trying to make is I've been doing this for so long, and I have one really good idea. You probably know it already, but just in case, because I want to feel good about myself, is that if we're going to bring back the earn service in some way, shape, or form, it 110%, and Zach will agree with me on this. I don't want to put words in his mouth, but I know for a fact he will agree with me on this, is because he's a good guy, is that it needs to be the way Aber and BlockFi are doing it, at least for their high net worth clients, where it's a locked-in CD type of situation. Because
Oh,
believe it or
absolutely.
not, okay, so you know that, great. Because if, believe it or not, this whole debacle we're going through now, if Celsius had done that, and of course, hindsight's 2020, we wouldn't be having this conversation right now, because you can't have a bank run if if you're locked in for 3-6 months, 3D. I'm willing to go as high as 10 years if you give me a good rate. Because I never want to sell my Bitcoin, ever. I want to give it to my kids. There'll be some debt on it. I never want to pay taxes. The whole reason I did this was to never sell the Bitcoin, because I started off taking all of my interest, selling it, and that was the money I lived on. And then somebody at Celsius, we were named nameless, who I think is a good person, and they gave good advice, but but we didn't know this was going to happen. Said, hey, why don't you just take loans off it? So I started doing that as well, which segues into my next point. The loans people, and I can't speak for everybody, but I think I speak for most of us, including the gentleman running Celsius Loans, is that one thing we can offer the earn people and the custody people is time. Our time threshold is dramatically looser than theirs is.
Mm-hmm.
And I have dozens of Bitcoins in earn too. So I don't want to screw anybody over, but we have the beauty of time more than the earn people do. What would even make that even better, where you even have even more time, is that when and if this all works out, and today's the first day it really feels like. Today's literally the first day it really feels like we're going to win. Today is my first. Hey, sweetheart, I'm on the phone. I'm sorry.
It's okay.
You look lovely, by the way. I know. I'm sorry. Sorry about that. I just, I'm attractive girls talk to me. I don't know what to say, son. What was I going to say? What was I talking about?
Distracted.
I got very distracted. Yeah, I did.
Time preference of loan people.
Oh, okay. So the loan people, one of the things that would even extend that time outward further is if I qualified for it, a 6-figure loan right away. And I don't know if you could do it, but that would push the loan people out to wait even longer, so the earn and custody people could get theirs back. We're willing to give up time, even more so if we can get just a little bit of liquidity out. So here's how I see it. Roundabout figure, you give me a $200,000 loan when you open the doors again, I don't want to talk to you or even think about this for 3 years. I'm good, if that makes any sense. Yeah. And that's all I have to say for the time. I'm so excited. Today's the first day, because there's 3 big events happen. We don't have to rehash it. They happened in the last 24 hours that make me feel like, holy shit, we're going to pull this off. We're going to pull this off, guys. We're going to do it.
We're going to
Thank you so much, Simon. Thank you, Zach.
We have to do it. Not doing it is too disastrous.
Yeah. And Zach, congratulations to Zach, because the guy's going to wind up getting a call from Goldman Sachs to be an investment banker now after everything is done. So it's not nearly he probably benefits more than anybody out of this situation. The guy literally got a Harvard MBA during this whole thing.
Yeah,
and that's all. I'm done.
Screw Goldman Sachs. We'll create our own Bitcoin investment bank.
Exactly.
But yeah, no, CDs totally. Instant withdrawals is very hard to manage the risk when you have the combination of low fees and instant withdrawals, and high returns and alleged low risk. That's why we are where we are. Lock-in periods. The banking system works that way, and there's a reason why yield is very low on instant withdrawals. So thank you for that. Okay, anyone else? I let a few people up. Anyone like to ask something? No? Okay, we've got some more requests. I'm going to let some more people up. Oh, we've got more requests.
I'll go.
Yeah, go for it.
All right, thanks. So Simon, look, I'll just be honest, and forgive me for saying this, but I'm a little irritated. And look, you guys, there's a lot of, I'd say there's some good stuff being discussed here. There's some good ideas and stuff. But, the thing I'm irritated about is just this, right? And I'll ask a question straight off the bat. It's basically, all right, what is the financial, I guess, like, what does BF Global look like financially right now, right? That's really all I care about.
Yeah, well, if you're an accredited or high net worth investor, then we'll be doing a securities offering where we'd make full disclosures and reveal our financial position.
You mentioned that. So then does that come after, like at what stage does this come? I mean, do we basically have to agree to pushing your proposal forward without looking at any of that information before we make that decision? Because I think that's kind of like putting the carriage before the horse, or however you say that.
Yeah, no, we're just coding up a solution to create a new type of security that would essentially do something we've never done before. So we're creating a security whereby we'll be revealing more. We've got the dev team coding it up at the moment. We'll be doing a new type of mechanism that we think could really be used in these types of eventualities where you've got multiple events that can happen, and therefore the valuation is dependent upon certain outcomes. And it's a really exciting product that we're looking to bring to market, and we'll be doing it on the BF Global pitch for the first time. But to give you, yeah.
I was
So
just going
then,
to say to help with the communication here, that Simon, I think what you're saying here is that yes, we will all in these disclosures, you will get all the information prior to making an investment decision. Okay, and that's the whole point of disclosures.
Yes, exactly.
No,
I can't come on here. I know that everyone wants me to come on here and give you information, but then if you rely upon that information in making an investment decision, you have to give the full disclosures and make sure that you're.
So just to make it clear,
yeah.
All I'm asking is this: you're saying that there does not exist like a snapshot of what Bank to the Future Global looks like from a financial perspective.
Yeah, we're a private company, so we don't publicly report our accounts.
Sure, I understand that, but then how do you get clients? I mean, how do you market that, right? I mean, without, like, let's say you just show up on my doorstep one day, and then you're like, "Hey, man, I run this fund."
Well, let me answer the question.
Yeah.
Because we fully segregate our client assets, so we don't put your assets on our balance sheet, and we don't own your funds. So if BF Global as a regulated institution goes bankrupt, then we have to have disaster recovery and business continuity planning and contingency companies that would take over the relationship. So that's the difference between a regulated and non-regulated business. You have to have all these procedures in place before you can do business. And so we don't put your assets on our balance sheet because our assets are our assets and your assets are your assets. And so we, have a fully segregated, separate company that holds all the shares on behalf of clients on a pass-through basis. And then we have a separate virtual asset service provider business that holds, client assets that when they want to invest. But those are separate from our company. And then our company has to have all sorts of policies and procedures in place in case, we entered into financial distress. So that's why, the only reason we're going through this process is because traditional brokers and regulated institutions already have all these processes set up. But with Celsius, it didn't have any of those.
I just think that's, to be honest with you, look, I just think it's a very long answer for a very quick and easy question. I just don't see how a business can be marketable. I'm just having a hard time putting logic to reason here because, okay, if I had a company like yours, how do I market it? How do I market it, right? Like, I mean, how am I going to get anybody to believe it?
You don't market it. You have to be a registered broker in order to be an affiliate to a regulated company.
So then there has to be some body that has information about your company that can at least validate that there's X. Like this, if you're saying it's $1 billion organization or $1 million organization or whatever, there has to be something.
Calm down. You're asking quite a few questions in one go. So let's start with you're asking.
I am calm. My voice has not changed.
Yeah, but you're asking, you're rapid firing lots of different questions. If you want me to answer them, then
you didn't answer the first question, so that's why I'm asking it again in different ways.
I'm saying to you, firstly, you're coming on very confrontational.
No, I think you're getting a little flustered. So go ahead and answer. Say what you got to say.
Okay. If you would like to know the financial position of a private company, then we will do a securities offering so that we disclose all that because we have no requirement to disclose it at this stage. If we become a public company, then you can get those disclosures publicly. Now, right now, I could tell you our financial position, but I don't want to give you information when we're doing a securities offering later that then you get half the information, because we need to make sure that we're doing a full disclosure statement and it's
Okay,
been
then
through
I
all of
get
that.
that. Fine.
Yeah.
Then when does the securities disclosure happen, and at what stage of the use of the bankruptcy court process will
So
that be?
there's two different processes. One, BF Global, independent of this process, is going to be doing a securities offering in order to implement a growth strategy and raise additional capital. Second to that, if a company was in the bidding process, then they would have to meet all the requirements of Celsius's investment bank in order to enter that bidding process. And Celsius Investment Bank would negotiate with all the bidders to try and find the best deal. And if it was a cash bid, then they could accept that offer. And if it was a cash plus reorg, then there would be a full disclosure statement, and you would get to vote on that, where all the appropriate information would be available.
Okay, and then my question to that would be this: how would you be able to enter the bidding process, and what would you need as far as right now? Right? I mean, let's just say you're campaigning. So, I mean, what do we need to do to get your name in the mix?
Nothing. That's just a company that meets the requirements to be a qualified bidder with Celsius Investment Bank.
So then, basically, you take care of the bidding application yourself. It goes straight to the UCC. They review it,
The
and
UCC
then
is not involved. No, it's Celsius.
oh, I see.
Celsius have
It goes to
exclusivity.
Celsius. Celsius.
So the UCC have signed an NDA with Celsius, and Celsius control the entire process. If you
Got it.
submit a plan to the UCC, you're breaching the process, and you would make yourself a non-qualifying bidder.
I see. Well, that's fine then. And and you're right. I do know that Celsius is basically, they have full say in how the bidding process works. They can take it off if they want. They can do whatever, right? Because they have, and legitimately so, I think, it's their company. So they should have a say in this, not somebody else. So, I mean, basically, let's say if you were to put in the application, that's not us signing off on you entering the bid, and that ratification happens regardless, and whether or not we vote for a particular proposal or not. The voting stage comes later. Is that right?
Yeah, Celsius decides who's in the bid, and if someone puts in a reorg proposal, then there's a voting process. Just if you want to get a case study, just watch what's happening in Voyager at the moment. It's going through it all in real time right now.
Right. Okay. And who's
clear?
that? Is that Derek's company that you're
So
talking about?
Voyager is another company that went into Chapter 11.
No. I know who Voyager is. I'm talking about
Okay.
the bid.
The bid is well, it looks like Sam Bankman-Fried and FTX are winning, but they're getting lots of regulatory pushback for offering unlicensed securities at the moment. So they're trying to figure out whether that will be approved or not.
Right. And that's something we're going to have to, we're going to face that music too. And Bank to the Future as well, right? Look,
Well,
listen,
Bank to the Future
Simon,
doesn't offer unlicensed securities. It offers securities.
I understand that. Look, I don't have anything against you, right? I'm just being honest with you. I'm just saying that, look, at this stage, I think transparency matters, and that's all I'm trying to get out of you.
Sure.
You say a lot of smart things. I get it.
I think I've been more transparent than anyone. I think.
Well, when you don't have something in writing and it kind of,
well, that would breach the process. So you're only allowed. I'm trying to provide transparency when Celsius don't want me to. So if I get sued and disqualified from the process because I'm providing too much transparency, then I'm breaching.
No, but you made that decision, right? When you choose to go private. So I mean, look, that's
sorry,
your
we're a
decision.
private company, yeah. So is Celsius.
Yeah. No, I understand that. No, but Celsius is all over, right? Like we have access to all their information, and they provided it to us.
Sure, because they're in bankruptcy. So if we enter bankruptcy, we would have to provide it all too.
Well, that's all I had to ask.
Cool. Thank you.
All right. Can I go?
Hello. Hello.
Hello.
Hi there.
Yes. Good evening. I wanted to switch the speakers because too much discussion between the both of you about the BF legibility around securities. You have been doing a great job on your platform to bring awareness. What is it to be an accredited investor? So there is no question about that. I trust that. If we can make a summary of what is in front of us in terms of dates, we have an hearing tomorrow, I think. What we are waiting now, the examiner report. You've done your series perfectly. So what it is in front of us? What are the dates? What do we expect on the court side? Because this is where all will happen. And please, if you can summarize what is in front of us.
Yeah, I think so. Tomorrow is further details on finalising the bidding process. There was multiple objections to the bid because they wanted to establish property rights, which is the custody versus earn versus stablecoins issue. This we'll get more clarity. Celsius, they extended out the bidding process, so they pushed everything by a few weeks to the point where it would start. I think, don't quote me. I put the timetable on my Twitter feed today.
I just posted it in the nest. Otis had it up there.
Oh, awesome. Okay. Yeah, so we've you can see it there. That it's going to head up right up until Christmas in order to get through the bidding process. The only challenge with that is the property rights issue could go on a long time, and the examiner, they want an examiner's report, and the examiner has extended the scope of what they're covering, but I think they can do it partially to solve the property rights. But they added misrepresentations in the sell token today to the examiner's report. And so that may interfere in the bidding process, but maybe these can happen side by side. We'll find out, and hopefully we'll get more clarity in tomorrow.
Thank you. Yes, I have seen that, the extent of the examiner scope. I leave the mic. I think Cam Cruz want to talk about the mining business.
Okay, thank you. Okay, who'd like to say something?
Hi, can you hear me?
Yeah, I can hear you.
Hi. I was wondering if you could give your opinion on the status and potential resolution of the preferred equity ad hoc process that's going on right now.
So my understanding is that they filed a motion in order to get us to pay for their representation so they could set up a preferred equity committee. And I think that was violently denied by the UCC because they thought these are all highly sophisticated professional investors and they can pay their own bills. So they've been appearing at the hearings, and I think their strategy is to see if they've got any leverage in trying to get access to the mining operation. I think the key things there are how were they represented when the Canadian pension fund was sold the investment. I have a suspicion that because it makes no sense to me that a Canadian pension fund would invest in a high-risk startup like Celsius. So my suspicion is that they were probably pitched that make an investment in us and we'll give you access to the mining operation. The reason I believe that is because a pension, if they were trying to make a Bitcoin investment, then a mining IPO is something that you would just about get past your investor committee to try and have in a pension. An investment in a company like Celsius or any of the other companies we've raised finance for at Bank to the Future just wouldn't fit in the manifesto of a pension fund. So my guess is that they feel that they have entitlement to that mining operation, and there was an intercompany loan. I'm just discussing public information here. And so they're probably putting forward a case and they're building towards that. So, but the UCC have expressed that they believe that because the estate is insolvent, that everything would go towards the creditors, but they might try and get some additional upside. That's the latest there. It also highlighted some of the ways that we work at Bank to the Future as well, which I think is interesting for people to understand. So because we invested in the ordinary shares in the Series A, and we do it under a naught and what's called a 0 and 5 model, which is where we charge no annual fee. Everyone invests for free, but when we distribute returns, we charge the investor 5%. The upside of that is you get a low cost model. The upside of that is that in cases like this, there is no admin fee in order to hire counsel. And so everything happens on what's called a pass-through basis, where we just pass on the vote, and each investor gets to make their own vote, and then we pass the vote on. Whereas if you were going for something like a Canadian pension fund, there would be something like a fund administration fee that allows them to hire counsel and do such representations to try and maximize the value of their investments. So I think it highlights some interesting points for people to understand the difference as well. Got nothing else on that. I don't know what else is happening other than that.
Was it 20% or is it 5%? I just wanted to clarify.
Bank to the Future is Bank to the Future. Yeah, our business model is 5% of returns.
Okay.
So of distribution. So if we ever, for example, Shapeshift, when they went into a DAO, we distributed a bunch of tokens and we charged 5%. When Coinbase went public, we distributed the public shares and we get 5% of those shares. When Bitstamp was sold for an acquisition, we distribute the dollars and we get 5%. When BSave was sold to Celsius, they distribute a Bitcoin dividend, and then we distribute that minus 5% to investors.
So basically, anytime anybody were to withdraw their investment or whatever, that's when your fee is taken off. Otherwise,
anytime we distribute it, not withdraw.
Oh, I see. Okay, and
if you get a dividend
got it. Okay, then a follow-up question. This might be a little off topic on that one, but tomorrow's a court date. Are there any time-bound deadlines for putting? I don't know. I mean, basically, I think that there's some time-bound activities that we need to respond to. And I'm not sure if it's tomorrow or if it's been delayed as well to next week. So do you know anything about any of that?
I don't know the answer, sorry.
Okay. Do you know of any kind of time-bound activities that we have, like, as far as approving or questioning a motion that was presented so far?
No, I'm not aware of any, but don't take that as legal advice. There may be loads of things. It's hard to keep up.
Sure. Okay, no worries. Thanks.
Thank you.
If I can entertain the discussion.
Please do. I've let a few more people up.
Yeah, we turn them. As the revenue model has been discussed around mining and staking, I wanted your quick opinion on the stacking of coins in the light of a reorg plan. What do you think about stacking? Does it require anything to be performed by a company? Many sex exchanges are doing that on behalf of a customer for a fee. So that is a resource of revenue which has been pushed forward by Celsius to be one good stream. And also one important point, we are still at the same step. We are looking for a disclosure statement for a plan. Celsius is trying to play politics to push competitors to publish their plan. Where is Celsius with its plan still waiting? What is your opinion on that? Are they doing politics? Are we going ever
Let me take. Yeah, that's two questions, so I'll try and take them one at a time.
Sorry. Thank you. Bye.
So the first question. Custody is normally a regulated activity. So you normally need, depending on what you're offering, either securities, money transmitters, or trust licenses in order to offer custody services. Typically when you go to a company like BitGo or someone, they have these registrations. So what I would attempt to do is look at the different services. Some could be securities, and others could be just simple custody. If I were doing this, I'd look to integrate it with GK8, take the funds off Fireblocks, put it in GK8, and try and make that a profitable business. Give everyone their funds in custody so that they own their funds, and then have a business model that doesn't depend upon them keeping their funds with us. So it's not subject at the mercy of a bank run, because everything's a security. Yeah, so that everything's a security fully disclosed. And then if we make returns for people, then they can, we could win back trust, and also give them incentives to stay rather than forcing them to stay. And so that's the way we kind of design the model. So we'd give the haircut to custody. But many of those would want to probably stake their ETH. Initially, I think you're pretty safe offering staking services without making it a security. But in the upcoming consultations and executive orders, they've hinted at the exchanges that are offering staking as a service is likely to be a security in the future. So making sure that we're ready to integrate those services with BFID, which is the compliance layer and technology we built, so we can adjust based upon whatever happens with different registrations. So that's how I think about it. Mining services. So we did offer mining securities in the past, but we wouldn't look to do that. My suggestion would be along the lines of what Anthony originally proposed, which is to make sure that the company is moving towards, a standalone company. I'd put it as an asset 100% owned by the fund, so that everyone has exposure to it. And then it's just one startup in a huge startup in a portfolio of. And so if you think about a fund that gives you exposure, you'd want proof of work, proof of stake. So you've got GK8 and mining, Bitcoin mining. And then BF Global would you give you exposure to many of the different companies in the industry because of our business model. So that would be a really nice diversified model. So the mining, I don't, try and get that where they can keep as many, do the Bitcoin standard. That's what we did at Bank to the Future. We always earned enough dollars in order to pay for our overhead. And then we kept all of our Bitcoin and ETH fees. And then we rode them out, and they became essentially Bitcoin on our balance sheet, became our venture capitalists. So we never had to get VC funding because we never sold our Bitcoin and ETH. I think that's the model of a mining operation. What you need to do is have a company that has the ability to access capital markets, borrow as much fiat in order to grow the business, but keep the Bitcoin on the balance sheet. And that's the only way I know of to run a mining company, and then try and get the equity valuation through to an IPO into the next bull market, if a bull market comes. That would be my suggestion, and that was
This is
around.
Very good. This is very good.
To do that as well. Yeah.
Mm-hmm. This is the good view, but you need the capital, as you said. Can you switch now to the plan disclosure statement and the politics around Celsius will never file a plan? What is your opinion towards that?
I think you just got to look at Voyager. Voyager. This will be the last question, then we'll bring someone else up. But when we originally hired counsel, they told me about the Kirkland strategy. And the Kirkland strategy is that, remember, Kirkland's in charge, is that you essentially put a bunch of restructurers on the board, and then you pretend that you're going to do a reorg, and you spend lots of resources and time so that then you launch a bidding process, and you get those bids up competing with a fake reorg. And then the real process that they want to follow is to have an auction so that you can get the client's release and you can make as many of the legal issues go away by taking all of those assets over to another company, and then making sure that you're working with the UCC in order to maximize that for creditors, and then close the company. And I think they were just following the Kirkland playbook. So you may get to see an attempt at a reorg, but we'll see what happens in the bidding process.
Thank you very much. Next speaker.
I think that's me. Yeah, Simon. Hello. Good evening. So I were making some notes, and I would like to ask you some questions. It's just for me understanding. So first of all, do you know when the exclusivity periods end for Celsius? Do we know that it got pushed out, right, to November?
It didn't get pushed out. No, it's mid-November. And then I asked the CEO whether he would apply for an extension. Okay, he said yes.
And you actually do not expect the plan from them to officially declare here's our plan, because if this would be the case, I would then like to ask you also to look at this plan. Okay. So
yeah, I don't believe that a Celsius reorg can happen. That's just my belief. Other people still do. So you should look at two sides of that story.
Yeah. I mean, I think for everybody up here in Twitter, and also probably who's not using Twitter, is people actually do not need the attempt of a second flywheel. Let's put it this way. So now we're coming back to...
I know that because I gave them a reorg and they didn't want to do it.
This is also so important why we have to, again, talk about what you are actually bringing to the table. And here is what I understand. You see yourself actually as a bidder. So, and of course, as a bidder, because you're also part of this community.
I do now, but it was the third step. Firstly, I saw themselves as someone trying to help Celsius. Then I tried to organize a bailout, and then finally, I looked at the final process, which is bid.
We all see how much you have to lose. Okay, I mean, again, I think we all fascinated how much transparency this technology actually brings to the table. But okay, you see yourself as a bidder, and you bring to the table, at least that's my understanding, diversification plus liquidity. Diversification is that with your licenses, what you say, we can opt in securities. There I probably would ask you, okay, would it be cheaper to do this on your platform? And I know you have this special here, like invest in companies with who belong to crypto, to the crypto industry, and not just like, okay, I'd be a McDonald's or whatever. But would it be cheaper to do this over your platform than when I use a legal broker? But we can leave this outside.
Yeah, no, I'll answer that question. I just want to do one at a time. So issuing shares to 300,000 to 600,000 investors is an immensely expensive process, full with an incredible number of challenges. And we're already millions into the process to try and put together a structure. And it then requires, regulators wanting to do what's best for creditors. And so that requires an element of negotiation, so that you have to be in a position where regulators get what they want, in order to offer what we think is right for creditors. So because otherwise it just wouldn't be possible.
I get this, but when you look at the real securities, right? When I really hold a company from...
Do you mean public companies versus private companies?
Public company here in Germany, then I'm at least as a security holder always just invited at least to their official meeting once a year where they reveal their numbers. Never mind.
Yeah, so this would have to be a public reporting company, which interestingly, because Salt had an SEC issue really early when they invented this market, they had to negotiate with the SEC to resolve that issue. And part of the negotiation was to be a private company that actually operates as a public reporting company. So they had to build the really expensive infrastructure over the last years in order to offer that level of transparency. So they're already halfway set up for us in order to execute something like that.
Yeah, I understand. Again, even with using all these services today, I just as a little retail guy can tell you, okay, even trying to understand all their products, all their features, I still have the feeling to get screwed. But never mind. So
Yeah.
let's say,
That's what
okay,
disclosure does, right? It tells you the risks so that you know and think, okay, this one's not for me. I could get screwed. That's a good
yeah,
thing.
yeah.
That's not a bad thing.
Okay, but so you offered what we said, diversification, because you security and crypto, right? And what you say with your plan, 47.4% of the coins would then be movable again.
Yeah, no, that's not a fixed number. That's based
Oh
upon
yes.
the coin report, and that could change based
Okay.
upon market conditions. There's a if you want to if we want to look at just a way that's already got through the court process, we could just replicate what Voyager did in their bid, which was they put together a formula based upon a set price in a certain time, payment in kind, which locked in the haircut, and then they took out the VGX token. So we could try and replicate a model that's already been signed off if we want the path of least resistance.
Yeah, I don't know. I have to think about this because again, I'm just looking here at my key fact. Okay, diversification. I have like a foot in the legal financial system. Let's see if I really use this. Of course, focused on our crypto industry, and I would like to have and I have the coins at least like let's say half of it what was there. So now coming to the second part of this, what we said, liquidity. I understand that through your fund you add this liquidity to the community, and that's actually where you give the people the opportunity to go long, actually with their crypto, but also with the fund. And now let's talk about the setup of the fund. What you said, what I currently understand is, okay, the fund would contain 20% of your company, and therefore I think like what we know
Can I
is what,
just say
yeah,
this was just an initial idea?
yes,
A
yes,
full
I understand.
disclosure statement would give full
Sorry,
details. Yeah,
I'm just working with examples up here. But
yeah,
what
yeah.
you said, right, is like 20% of my company. What we then
That would have to
yeah,
get shareholder approval. It's just a suggestion.
I also
Yeah,
totally understand. Yeah,
yeah.
but and then and of course the equity of Celsius, right? This is, and then you
No,
have to hold.
Celsius equity would disappear. So I'd suggest setting up a fund and putting together a bunch of assets within that fund. One of them would be 100% of Celsius mining. Another would be 100% of GK8. And then there'd be a bunch of other assets. And then a percentage of a bidder that could offer all the services and take advantage of offering all the services in loans, custodies, and earn through securities, and then putting some of that equity in the fund. So what I tried to
Okay.
do was engineer the strategy so that we're not going for cash bids. We're
Yes,
going
yes.
for the company that's willing to offer the equity.
Yes, but so I understand you want to actually back the fund, which then provides after a year actually the
Well, a
liquidity
fund
to the,
holds assets, and there's a
yes.
bunch of assets, and a venture capital fund holds shares in lots of different companies. And in this case, there's 3 different companies, and then there's a bunch of other assets. So it's a yeah.
Okay. So again, yeah, the question
Yeah.
is just
We'll do one more question, then we'll let someone else up.
no. Do I have something else? No, thank you. That's all for the moment.
Awesome, thank you. Hopefully it's clear. Again, please do not take any of this as a disclosure or financial advice or investment advice. The decision that you would make would only be made when full disclosures are given, and a fully compliant structure is set up, and all the things that need to happen. I'm just trying to share educational ideas here, so that people understand what's coming. Okay, who's next?
Hi, Simon. Just wanted to talk a bit about mining. I know we already broached that subject. I was looking at the mining report that was filed for September, and if you compare that to July, it shows that the BTC position in July was increased about 300 BTC, and the position was increased about 258 BTC for September, which individually sounds like a good thing. However, the August report is missing, and over 300 BTC decreased between July and September, and that's just very concerning. Like to see like a missing report where all the gains that are illustrated in July and September are kind of unwound. I was wondering whether, I guess, your confidence in the operation and kind of ideas around how to get a better sense of how this operation is actually doing.
Yeah, the key thing I'd look for is more time, and I'm pretty sure that the people running Celsius Mining right now are under ultra high pressure. They are listening to things that people are saying. They're not just going to be sat here as incompetent operators. They're going to be adjusting. And so the whole point of putting it in a fund, accountable to a fund manager, accountable to a creditor committee, would be that it's just treated as one investment. And that one investment either has the perfect team right now and the perfect strategy to move forward, but give it an opportunity to get out of Chapter 11 and be able to, put itself in a position where it can raise the capital that it needs as a standalone company. And then if it needs additional fiat in order to get through the time and build a Bitcoin balance sheet, then make sure it's got the optimized structure to do that. If it turns out that the management team are not the right management team, then put in additional management or whatever's needed, just support them in getting that company to where it needs to be. And then I'm confident in proof of work, and if it turns out that it's unfixable, then there's a bunch of hard assets, and you put it in Chapter 11, and then you have to sell off all of those hard assets and whatever Bitcoin it has. But what I'm saying is, I don't think we're going to solve all of that in Chapter 11. So create a structure that gets out of Chapter 11, which looks like the bidding process is that process, and then give it the breathing space it needs with the time that it needs in order to move towards either IPOing like other mining companies. I know many that are going through that process right now. I know that that's what they originally engaged Citibank to do. And I can't discuss any non-public information, but all of the public information is available right there. And yeah, it's invested heavy and it's not profitable right now. And they have their forecasts. And so just make it accountable to someone that knows what they're doing. And the UCC is doing diligence right now. Their investment bank would have been doing diligence. So I'm confident that there's a tremendous amount of value that we can benefit from if we can just put together a long-term strategy rather than a short-term strategy. Selling it right now at distress, I don't believe maximizes the value at all in any way, shape, or form. And doing something like a mining-backed security, which we've done in the past, where we pay daily dividends in Bitcoin, I don't think that's the right strategy to maximize filling the hole either.
Yeah, you mentioned the Series B investors may be trying to position themselves for a claim on mining. Just one possible idea to consider. If they have their eye on mining, we have a mining operation that's very cash intensive. I'm wondering if potentially they could be approached to double down on their investment, maybe raise 100 million to fund mining. They'd be able to get the upside, and then perhaps the BTC holders were missing 90,000 Bitcoin. Just use the operation to pay us back the missing Bitcoin. Perhaps could reach some sort of middle ground there. Just wanted to float that idea. You're muted if you're talking, Simon.
Sorry, I was on mute. Yeah, I think anything like that is going to extend the Chapter 11 process. If you sell off the assets individually, I don't think we're going to maximize the recovery. So, in terms of missing coins, you've got like a $3 billion hole to fill. That depends on currency fluctuations. So what I think is the best approach is, rather than reorging and messing around with all the assets individually, get it out of Chapter 11 as fast as possible through a bid. Make sure that there's a structure where creditors gain access to all the upside, and then slowly work on the correct processes to maximize those venture capital investments. I just think that's going to outperform, trying to rush something through and delay the whole process. And I think if we don't find a way of maximizing everything, then I think we either expose ourselves to one bet, and I don't want to bet on one company. If I had done that, that any venture capitalist needs a minimum of 10 bets in order to win big. If you bet yourself on one operation, then we could end up back in, if that doesn't work out, then this could be another PR disaster. I want to have, several bets that can work out in order to fill that hole rather than just one. So that's why that's why I suggested the fund structure. But again, that's immensely challenging to pull off. Getting a fund for 300 to 600,000 creditors has so many challenges that we need to overcome.
Yeah, just one last question. You mentioned potentially reorganizing the custodial services around GK8. It looks like the acquisition was made about a year ago, and presumably there were some sort of obstacles around Celsius using them instead of Fireblocks. Do you have a sense of how difficult or cost intensive it might be to change things up and start using them?
I think I don't see anything there. I think it was just probably on the roadmap of a million things to do, and they were probably implementing it. So the good thing about GK8 is currently, with public information, it's an unprofitable business. But I think if you could create a compelling future for all customers where they're willing to stay, then I think you could get a significant, by putting together amazing perks for staying, I think you could get a significant amount of those. When the ST becomes ETH, and that's all worked itself out, I think you could get a significant number of those people to stake them through GK8, put all the assets in custody, take them out of Fireblocks, put them in GK8, and hopefully that can take them to profit depending on the model. And then if it takes them to profit, let's see, this is an early stage startup that has all the potential to try and compete with Fireblocks. At Bank to the Future, we've got approximately 100 companies in our portfolio. If we were involved in this over a long term, we'd look to try and persuade all of our clients and our portfolio companies to switch from Fireblocks to GK8 if there's a great service.
Yep, makes sense. Thanks, Simon.
Awesome. Who's next?
Hello, Simon. Can I speak?
Absolutely.
Yeah, all right. So I have a question regarding this discussion we had the other day regarding like a sliding scale between coin and equity in the initial distribution. I see a risk of...
We should say fund rather than equity, by the way. Equity is just a bunch of equity that's held within a fund.
Yes. I shares in the fund then, let's say it that way. So, because especially initially, I understand that fund may be valued low and drop in value until the businesses are restructured in a way that they start.
Yeah, it's not liquid, so it doesn't have real-time pricing. It just has a net asset value, and companies technically don't really change valuation much unless a big event happens, like a pricing event. So the net asset value would be pretty consistent.
Yeah. So what I'm trying to say is that because of that, it doesn't fit very well into a collateral scenario unless you already have margins on your collateral versus your loan amount. Therefore, this sliding scale for trying to select for the more individual risk-reward ratio in your initial distribution makes a lot of sense. I think that if you do that equitable distribution that you proposed, you will make the loan portfolio a lot riskier, or even the whole portfolio will take a hit, which I don't think is optimal for the asset value.
Yeah, so far it might only be done on earn, because so far the loans Ad-Hocs have been working out structures with Salt that really work in a way that they're happy with. And I've in video 6, when I shared the whole abundance versus scarcity mindset, rather than all fighting for coins, we just decide whether we want more coins or more
exactly.
or more fund. Pretty much unanimously, like there's way we think that there's more than enough earn that want fund to make up for any custody and a whole lot more. So I think we're going to be able to resolve this pretty easily now. Now everyone's on the right mindset.
That sounds good, because that's exactly what I think is the way forward. And I certainly would give up my
I would as well.
allocation that I have for that fund.
Yeah. So, and I'll be taking, just so you know, I'll be taking my claim, and I'll be putting it side by side, and I'll be taking more risk with it, because this was my risk portfolio. I hold Bitcoin in private keys for non-risk, but this was part of my risk portfolio, so I'll be putting it in risk.
No, that's my argument the whole way. The different accounts in Celsius have a different risk profile, even if Celsius did not abide by that. But so, putting your coins in an earn account, you do with different thoughts about risk than you do when you put it in collateral or custody.
I think the point here is let the court process roll out, but whatever happens, we'll be okay. We'll come up with a great solution.
Okay, that sounds good. Thank you.
Thank you. Okay, who's next? I'll let some more. We've got a full stage. If anyone wants to jump off, if they're not gonna, I can let some more people up. Or if anyone wants to say something.
Yeah, Simon, I'll just, I'm talking with top 50 creditors, whether they're in earn and borrow. And one of the ideas that's come across is exactly like you said, you provide 50% immediate liquidity to, say, someone that's an earn user. And now, if you could model that in such a way that through Sean, through Salt Lending, or Nuco Lending, whatever it looks like, allowing that earn user with their liquidity to be able to immediately use that to take out a loan, and then they want at a 50% LTV, whatever. In a Nuco with lending, they can then either get more Bitcoin, do whatever they want, but it reshapes that earn account into remaking it into an all lending company. I don't know if that's something you've thought about. It's an initial concept some of these top 50 people have come up with. I don't know if you've seen it or if you have any feedback or any ideas, if that would be something where around Salt and around Sean, giving people with that immediate liquidity if they want to borrow against it as well.
Yeah, I'd leave that up to Sean and the management team. They know that business inside out. I'm sure they're thinking about the right things. We'd let them do what they know how to do, and if securities are involved, we bring our expertise to the table. But you're in capable hands to discuss that. Sean really geeks out over these different structures, and when it needs securities, we bring that to the table. Thank you.
Cheers. Thanks.
Okay, who else would like to come up? We've got a full stage.
Hey,
I appreciate the time. I'll drop down. Thank you.
Thank you.
Hey, Simon, I certainly appreciate all the time and effort you've put into this, and I know money as well. I have two questions. One is, and you've kind of said you don't want to do this, well, at least someone else might be obligated to do this before. But I don't know if we've seen enough of the numbers from Celsius for how much the assets might be worth, and on top of the equity assets. To give us a really clear picture of if we sold everything, liquidated everything, Chapter 7, I guess, sort of thing, where if we just said, all right, here, we sold every bit of every property that Celsius owned, and that would make us, say, 70% whole. I don't know what it is. I'm wondering if, what that number is, and then what then the risk of doing the equity plan you're proposing, of where we absorb the equity or not, absorb or assigned, I guess, the equity.
get those details. Celsius's investment bank will be working through all those models. They put together a bidding process where people can bid on the individual assets. They can see what value they get. And then they do an analysis about whether they think a reorg fund structure, for example, or another structure would maximize those assets. So that would be an analysis that the investment bank will do for you. I can't discuss non-public information, but all of those valuations would be completed to the standard of an investment bank.
So do you think that, watched all your videos, but so if the cash bid occurs, that would be on that arm, and then the reorg bid is the arm. So I guess what I'm looking at really, or wondering about, I guess, is, are we as the creditors going to have an opportunity to decide
No.
which one makes sense? Okay.
Yeah, if they go for a cash bid, we don't get to decide.
All right.
And from my perspective, the only way to counterbalance that is come up with an amazing creditor reorg where they just can't argue that the value is so much greater than the cash bid. Then you do get to vote. And so that's why I wanted to put together a structure that I think significantly outperforms selling everything here.
Right.
And then now the UCC is adjusted and the process is all getting adjusted to allow for such a structure. So I think we're winning. I think we're getting where we want to go. And yeah, I personally believe, unless there's a reason to sell all your assets in distress right now at the bottom of the market, then if you believe that there is a crypto recovery, then we can just reorganize all these assets so it rides the crypto recovery, and make sure everyone understands the risks and disclosures. But yeah, it's turn it into, if you want low risk, then just sell it all off here and take cash. If you want higher risk, then benefit from the upside. But there's a reason why people are bidding, because they think it's worth more than what they're paying.
Right. Sure. The other question I have is, so if we are assigned the equity, that we would need to basically post that equity into the fund to generate more revenue in the future, right? That would, is it? Are we having to post that equity as well, for example, as the crypto assets?
No. So what we're trying to do is simplify the structure. Rather than you having a bunch of equity, we just give all the equity to the fund, and then you just have a beneficial interest in that fund. And then you log into your account, you can see it. There's a portal for managing investor relations and corporate actions and voting and all the things you need to do. We built that tech.
But I guess
or it would probably have to be a public company. That's another element to it.
So I guess where I'm confused about is, let's say we have 40% of our tokens, 40% of our coins are, kind of given back to us. So we're 60%-ish of the coins are going to be the equity assigned to us, or allotted to us.
No. You get all the coins you're entitled to, and then you have your pro rata of a fund that's worth less than the whole. So I don't think the value of the fund is going to immediately be greater than the whole. Otherwise, you could just reorg this and sell everything and pay everyone off and be done. So you're going to end up with pro rata share of a fund. And the goal is to try and fill the hole by the value of that fund going up over the next few years. And that is, my suggestion was an active fund manager that works with all the assets to try and maximize their value. And then if one of those companies IPOs and it goes, you get maybe a 10x or something like that, then you've got 3 different companies that could potentially do that. And then a bunch of assets that can be recovered as well.
Okay.
So it's all about, how do you fill that $3 billion hole? Well, you're trying to create a fund that's worth a lot more than $3 billion, plus the opportunity cost that you actually could have had Bitcoin or ETH. And so the only way to try and outperform Bitcoin and ETH is have a diversified high risk, high return play. So that's what this is.
Yeah. Okay, cool. Thanks for that clarification.
Pleasure. Okay, who's next?
I'll go if no one else wants to go. Hey, Simon, can you hear me fine?
Sorry, I didn't hear you. Sorry, say that again.
Can you hear me fine?
Yeah, you good. Yeah, thank you.
Okay, cool. Yeah, thanks for doing this space. Just had a quick question. I've been seeing a lot of chatter on Twitter, people debating about that whole 2 and 20 model or 0 and 5. I mean, I understand it. I've done my research. I just wanted to, have you kind of go into that a little bit more on what, from your experience, why you see the 2 and 20 model better for this situation versus like a 0 and 5 model or some kind of, steering group, community-led program or something like that. I just wanted you to kind of get into that a little bit more, just based on your experience.
Sure. Well, I guess it's just a philosophy. So firstly, I don't want to be the fund manager because this would be most likely a US fund that would require US, regulations, and I don't want to be drawn into US. That's why we segregate all our US business to US. And so, we get a professional fund manager that has a proven track record. And they should be able to make up for their fee. Someone that charges 20% should be able to significantly outperform. Otherwise, they're a bad hire. And we can also get professionals from the industry that do this for a living alongside their own. So we've got many people that we've worked with over the years that we could suggest. And you've got different models. One is you could do a 2 and 20. This is going to be a very expensive operation. This is going to have 300,000 to 600,000 investors with an immense amount of compliance and regulations to adhere to. That's going to need to be paid for. And then you want a performance upside. And I believe it's just a philosophical thing. I believe that paying for the best gets you the best results. If you want to go cheap, we can go cheap. But that's up to you. Well, it's not up to you. It's up to the structure in the end, and you get to vote. Another way of doing it is the 0 and 5, which is what we do at Bank to the Future. But I think as such a public accountable company, I don't think a low-cost structure would work. But we could try and attempt to do it and just do our normal Bank to the Future model. But having 300,000 to 600,000 investors with all the public reporting requirements, that's an seriously expensive operation to adhere to pull off. So that's kind of philosophically two different models on two different extremes. You could do one, we could do one in the middle if we want, but you'd get less talented people to do that because they're in a competitive market for talent. And so it just all depends how we want to do it. Personally, I'd go for a 2 and 20. But that's not really, I don't really have any axe to grind there. I just prefer having great people that are incentivized to get a big upside. That's just my preference. But don't underestimate the cost and severity of this operation. Assets don't just make money themselves. If you leave them to make money themselves, I think you'll get lower returns.
Thank you.
Hi, Simon. I'll go next if anybody can hear me. Can you hear me?
I can hear you.
Hey, Simon. Thanks for taking the time to do this. Appreciate it. So I look at things in a simple math way, right? So Celsius, from what I'm hearing, has about 1.5 million customers. If
registered users, and then 300 to 600,000 creditors, I think. Yeah, but 300,000 of them are like $10 accounts or something.
Okay, so but I'm just trying to ballpark, right? So let's say Celsius had 1.5 million customers, that have money in their or have coins in their accounts.
They don't. Yeah, they don't. They had 1.7 million emails.
Okay, that changes from the math equation, because what I was thinking was if there's 1.5 million customers with coins at risk, if we
I think there's 300,000 creditors with more than $100 on their account. I think that's correct. Someone can correct me if that's wrong. And I think there's 8,000 that have like high net worth accounts. Something along but all of this is published in public information.
Okay, I was wondering whether we can fund the whole ourselves. That's all.
Well, I tried to bail out, and it makes no sense to anybody. Everyone would try and bid on the assets instead of bailing out. So when I went for a bailout, I went around every investor that I think would be interested in doing this. They pledged that they would lend some funds, And then as soon as they realized what had happened and where it was going, they slowly, one by one, thought, well, we could get a much better deal than bailing out.
Even if that includes the customer base or the depositor base funding part of the whole ourselves. So if we were to put 5, 10, 15 grand in each, dollars wise, that's a significant chunk
So
of the whole.
the coin values right now are approximately 2.7 billion,
Okay.
based upon the last coin report, and the whole is approximately 3 billion. So if everyone wants to give all of their money, you'd still need more liquid assets to make up the whole. So yeah, if everyone agrees to give, just write off all of their money, then you could try and bail out, but much better structures than that. Give everyone 50% of their money and then give them an asset to get the full upside. I think that would significantly outperform.
Okay. Yeah, that makes sense. Thank you, Simon. I appreciate your time.
Pleasure. Okay, who's next?
Hey, Simon. I understand that there's a ruling coming up. I believe it's November 2nd regarding stablecoins. And full disclosure, I'm in Earn with only stablecoins. And I'm wondering if you've heard anything about which way that ruling may go, and more importantly, how would that impact a person in my position, their ability to participate in acquiring or being part of the fund?
So if, again, I'm not a lawyer, but let me try and work through some of these issues. If they successfully won the case that stablecoin holders were secured creditors, then they would get preference over everybody. So everyone would get their stablecoins back if there was enough stablecoins to back it. There isn't, so I don't know what they would do in the case. They'd have to sell. That's a bit of a weird situation. They'd have to sell some of the other assets in order to make sure there's enough stablecoins. So that's a very weird situation in itself.
Who's they in that sentence?
Celsius would have to execute if they are forced to treat. Well, then actually, this is a lawyer question. The secured creditors would take preference over unsecured creditors, and then there's not enough stable coins, so you would have to sell some of the assets in the estate in order to meet your secured creditor liability over the unsecured. It's just a really bad outcome. I think it's just so much better to not have that happen, and then everyone just get their equal share of either the fund, Bitcoin, or ETH, or however it is actually worked out in the end. But if they win that, then there's going to be a whole lot of operational and executional things to figure out, because they don't have enough stable coins and they're trying to sell their stable coins, but those are being objected to at the moment for the property right reason. So it opens up a can of worms if it is determined that stablecoin holders are secured creditors.
Okay, and
again, it comes from the scarcity mindset where we're all fighting over coins. Yeah. If everyone gets to the abundant that there's enough assets, and some people may want assets over coins, then we can probably solve the stablecoin issue as well.
Right. I guess I'm wondering is if that ruling did go favorably for whoever submitted it, would that preclude someone like myself who only has stablecoins in the app from participating in the fund?
I believe so, unless we put together a marketplace and then you could take your stablecoins and buy it off someone else in a year's time. So you could take your stablecoins and then buy the fund later rather than receive it. So whatever happens, I think you can eventually get exposure, but you may have to buy it off someone else's creditor. Someone in Earn, probably. Yeah.
Thanks.
Okay. Who's next?
Hey, Simon. You talked a little bit about compliance and regulation. I don't think we've really talked enough about it, considering here in the States, the we don't even know how to regulate cryptocurrencies. I'm not sure they know how to regulate a company coming out of Chapter 11 that deals with cryptocurrencies. And furthermore, Celsius is a
I think they do.
worldwide company.
Can I ask? And then I'll do
Oh,
another
yeah,
one. Yeah.
sure.
So they already are. So don't confuse cryptocurrency with securities. They've already deemed Earn a security because all the state regulators are going after all of the platforms right now, saying you're offering unlicensed securities. So they want Earn to be a security. Loans, even when backed by crypto, is subject to lending licenses, and custody and the exchange of tokens is subject to money transmission and custody. What you're talking about is how you treat whether the actual underlying asset is a security. But remember, you can, this is the whole how we test things, right? An orange is not a security, but if you're selling investment contracts in an orange plot, then the contract to invest is a security. So the contract to invest in an Earn product is 100% a security. There's no disputing it. Lending does require lending licenses, and exchanging money requires money transmitters and money service businesses. So I don't think there's any dispute over how to regulate this model. It's already been set. There is definitely dispute over whether a token is a security or not. That is not clear.
Yes, I agree with you, and that's kind of my point there. A lot of us are in a bunch of different coins, and the gentleman before me talked a bit about stable coins. I wanted to ask you how confident you are, and I've listened to all of your YouTube and your Twitter Spaces regarding the plan to move everything into Bitcoin and Ethereum. Which I think simplifies a lot of things because, again, the compliance and regulations are going to be quite a lot. So to conclude, my question is: Celsius is a worldwide company, and there are different rules and regulations with different states. So, for example, per your suggestion, I did make an account at Bank to the Future. However, and you're not help desk, I'll work through help desk, but the paperwork I provided was not satisfactory to the regulations for England, whereas they're satisfactory here in the States. How do you expect to cross those bridges, and have you guys thought about that? Thank you.
Yeah, that's the technology we built. So for the last decades, we built the BFID platform. And what BFID does is it takes the securities laws in different countries, and we built a custom user experience for those countries. So because you're from the US, you would have signed up in the BF Identity platform to a regulated US broker-dealer that would have had all the relevant state registrations. And if they're not registered in your state, then it wouldn't have allowed you to proceed. So what we've done is the BFID, which could be the glue between all these different technologies, it takes the local regulations that we've been just working through over years and years and years, and it only offers you the services that are available in the jurisdiction, and it requires you to provide all the documentation and suitability requirements of the country where you reside. So that was a technology that we've just been refining for years. So that's how we deal with it.
Thank you. So
we've made it very modular, so we can plug in. We're applying for example, 7 different licenses in 7 different countries right now. But you could plug in a new broker, and so if one broker becomes very crypto hostile, we can just switch it to another broker. You know, the whole mess that Celsius had to go through when it went from FCA started attacking the UK company, so then they switched to US, and it was a massive operation. We've got it now where it's a couple of clicks, and everyone could sign up with a new broker in a new jurisdiction, and that would be just engaging in a new agreement and registering with a new broker that's integrated into the technology as a seamless user experience. We've been through so much, hostility over the years that we've learned a thing or two about switching when you need to switch.
That's great information to have. Would you suggest that perhaps those of us, for me in the States, we wait to register or go through the full process until we have a plan together? And
register. We'll if you're interested in securities offerings, then if you qualify to invest in those securities offerings, then we'll let you know. And we've got some stuff coming up.
Yeah, I guess my point was I do. It's just you didn't like the paperwork. But again, I'll go through help desk. Thank you for your answer. I appreciate your time.
Yeah, the problem with compliance is user experience gets worse. We hate asking for these documents as much as you hate providing them, but that's how we get out. We don't end up in this mess. And so, yeah, unfortunately, taking draconian processes and implementing them with technology and making people upload paperwork is unfortunately the cost of being able to offer these services. Thank you. All right, I'm going to take a couple more questions and I'm going to have some dinner. Anyone else like to ask a question?
Hey, Mike, Simon, I have a follow-up for Bradley's question or idea with the stablecoins. I was wondering if that does get approved, or whatever the language is. I wonder if the stablecoins gets passed, I guess that case gets passed and they get distributed back to people. Maybe if the equity idea that you're proposing in the reorg does get passed, maybe there could be a venue for the people that still believe in Celsius and were assigned their stablecoins back. Maybe they could be included and there could be a marketplace to sell the equity shares before the lockup period, just for the only people that were Celsius creditors.
That can happen. Yeah, that can happen within Celsius because they don't have a securities license.
No, I meant if the Bank of the Future reorg idea happens.
Okay. Yeah. I mean, if the bid process happens, then this is all over, and then there would be an execution plan after that.
No, I think Bradley, a couple questions ago, Bradley was saying he had stablecoins locked up on the fund, locked up on Celsius. Mm-hmm. So if those got distributed as secured creditors, that 432 million or whatever it is of stablecoins would leave, but there's still, another 3 billion of coins plus the whole. That's still the company, right? So that would my understanding is, and maybe I'm wrong, but that those creditors that have stablecoins, I'm part of that cadre of people. I have stablecoins on the platform, so we would get those out, but all the other crypto is still the unsecured creditors, and that would stay, and that would be part of the remainder of the reorg. So what I was proposing or saying is, it sounded like Bradley still wanted to be a part of the ecosystem, that maybe if your reorg happens, that on the Bank of the Future platform, you could allow people like Bradley to still buy shares.
Yeah, I'm not sure of the timing of how it would all work, but if we were allowed to do that, certainly we could make it happen. But I'm just not sure of the timing and how everything gets resolved and all that stuff. Thank you. Okay, I've let some more people up. Okay. Anyone want to say anything?
Hi, Simon. Thanks for holding this space. I would just, I had a thought that because, of Celsius's lack of transparency, people are kind of like loath to trust anyone else again, since we've all been through this. I was just wondering, is there a way, if the funds are on the Bank to the Future platform, to be able to verify that the funds are where they're supposed to be and the funds are available in some way?
Sure. So those if you wanted to do the custody side, I'm sure GK8 could have some technology in order to achieve that. Why not? If it's all on chain, It depends if it's omnibus with other clients, and but yeah, I think that's what the platforms like that should strive to achieve.
Okay, brilliant. Thank you. That's all.
Thank you.
Hi, Simon. I've got another question, if you don't mind.
Go for it.
Right. Back earlier in 2022, Celsius in the well, I'm obviously British, but I live in the US, right? For transparency, Celsius sent out the requirement for people to register as accredited investors, right? And we all know, I work in the financial industry as well. We all know what that's about. I chose not to become an accredited investor. So, accredited investors is about being protected from more risky investments. That's really what the regulation is around. So
well, accredited is to opt out of protections. If you're non-accredited, you have higher protections.
Exactly, right?
Yeah.
So being a non-accredited investor, and for transparency, I have high five figures held up in Celsius right now, which is nothing in comparison to others, but significant in other ways. When we're talking about the court case and how the judge is going through all of this, and as well as the committees, is there any view or discussion around the protections that should have been awarded to non-accredited investors against accredited investors and custody? Because if you're really, I only joined Celsius 2021, right? So I'm relatively new, so I'm not part of the group that received 20% yields and so on, right? Where there only been 4 or 5%, if that. And then I decided not to become accredited, so should not have been part of more significant risky investments. And by default, I personally consider myself more of a custody type depositor, because I should have been protected similarly to custody, and I was only getting the continual yields because I opened an account earlier.
Yeah, let me try and you want to speak to a lawyer. You're giving your case why you think you should get a head start over other people. So you want to be in the custody group, and you're putting together an argument of why you thought you should be in custody. What I'm trying to do here is, the reason they're putting this through a bidding process and a Chapter 11 process is to remove all lawsuits, because you would have a case after, if Celsius reorged, you might want to bring that case forward later. And so they need to put it through a bidding process in order to make all that go away. Right. And so at this stage, if you want to put forward that argument that you believe by being not opting in as accredited, therefore you are that. What I would say, my kind of argument is, every single person on this platform was completely misrepresented, and they all invested in an illegal product. So we're all equal in that sense. Right. It just so happens that people were moved around, and therefore custody has a different legal meaning. And so people are using that in order to ensure that they get their coins back. And so my counter argument was, okay, fine, let the court do that. It was illegal for everybody, and we were all misrepresented. None of us got what we were meant to get. And so let the court decide that, and they will decide. But let's create an abundant mindset where just decide whether you want more coins or more fund. Maybe you don't want what you're asking for, and that's why I did video 7. Maybe the tax consequences might be a lot worse for you if you get what you're asking for. So if Celsius owns the money, that will have maybe Celsius's tax consequences and not yours. So I'm just saying, if we can put together the optimum plan in the end, you might be asking for something that you don't necessarily want.
Yeah,
and that's what I was trying to tell everyone.
Yeah, I mean, I think to be honest, right, the way that you're handling this are for the benefit of all of the depositors and creditors that are involved in this debacle. I'd rather just take my 5 figures and give it to you and say, you deal with it for the next 10 years. And if we make profit, we make profit, right? And because I like people that are honest and upfront and no surprises, right? So I'd rather do that. And I think probably a lot of this audience would be on board.
Yeah, but just to be clear, what we would do is we would give the funds to you, whatever's left in custody, so they're yours. You can withdraw them, do whatever you choose, and then you'd get your pro rata share of a fund if we succeed in getting this structure through, and then that would be something that you'd sit on for a long-term, high-risk, high-return, where you could lose everything or it could do really well.
Yeah, it makes sense. Thank you, Simon.
Thank you. Anybody else? Got some hands up.
Hey, Simon. I got a couple of questions for you. But first of all, thank you for clarifying. And I got a chance to catch up on your recent videos and AMAs. And it wasn't clear to me before, or maybe I was just digging my head in the sand. But I was kind of hoping that we wouldn't have to take a 50% haircut. And I think you clarified that, with your plan, we would. I wish you would reconsider, because I think there is a possibility of not taking the 50% haircut. But
how?
My two, by keeping the balance of what's missing and what can't be filled by equity. The equity is roughly about $1 billion. We are missing, the creditors are missing $3 billion. So whatever cannot be filled by equity, I would feel that the new co would assume that debt to be paid when and if we're successful. And if we are successful and people stay on the platform and are incentivized to stay on the platform by
you want someone that's willing to take on a $3 billion bet. Good luck trying to find one of those.
I'm not saying somebody else has to do it. I think Celsius can do that, or if you're involved, you can do that. I think that's just the way I'm looking at it is like very simple, maybe a little simple-minded, but if I lent $100,000 to a pizza shop and they were failing, they couldn't pay me back, and they said just take the company. I think I would want, if I took the company in lieu of the $100,000, I'd want to obviously have equity in the company, but I'd also want the profits of the company to hopefully make me whole over time.
Yeah.
Now, I understand wanting to start with a clean slate, but I think that, we could leave that on the books. There's plenty of companies that go public with debt. And, if the company's successful over time, the value goes up regardless if there's debt still on the books.
Sure, yeah. If there's someone that can make everyone whole and assume the debt, then awesome, we should take it.
Right. Okay. I mean, I wasn't going to go back into the topic, but I guess the question is if I was, the UCC or Celsius, would I be looking at, Simon Dixon's plan and saying, 1 second, could we do better? That's my only goal here is again, it's like a pizza shop. If the pizza shop went out of business, I'd want everything I can possibly get to make me whole. And if that is not going to make us insolvent, which it won't, as long as it's unsecured debt to be paid only if there's profits, then yeah, it might take a little longer to go public, but it's putting the creditors first in my mind. And I haven't heard a very clear reason why that's not feasible yet. I asked David Adler.
So sorry, you want just to, let me help. I'm not sure I'm understanding the idea. So is the idea that you want Celsius to go public?
Not necessarily public. It could go public or stay private, but I would want, if we can't be, if our hole can't be filled by equity alone, I would want the new co to, still owe us that money. So if the company is profitable, the profits go to pay us back first. Now, obviously, you have to incentivize, management.
Yeah.
And
that was the Bitfinex solution, basically, where we gave everyone a debt. And they could sell that debt or they could convert it to equity. We tried to do that. We couldn't find anyone that would be willing to do it.
Right, but again, why wouldn't Celsius offer that on their own?
Celsius need to get rid of their liabilities. If you think Celsius is looking to do something else.
With Bitfinex, you didn't get rid of the liabilities. Like you said, you issued a debt token.
Yeah, and then they were willing to assume the debt and they traded their way out of debt because they weren't having all of the regulatory issues, the CFTC, the SEC, the FTC, everyone that wants to sue them. They weren't defined as an illegal operation. They didn't. Right. If you think that regulators are going to let Celsius come out of this, I don't see how that's possible.
I don't think so either. No, I agree with you that Celsius is done. It's going to be a new co, but I would think
you're talking about them creating the new co.
Right. If it was a new co owned by creditors, new management, new co, completely a whole new operation, and they worked with regulators, I would think that the regulators would
Nah,
want
not
to.
gonna. I would give that 0% chance.
Okay, I guess I'm still hopeful. But anyway, my two questions for you were, one is how, under your plan, how would you see like incentivizing the 300,000 people to stay if equity is going to everybody and the haircut is going to be across the board no matter what. So then what would be the incentive? I already have my equity, so I'll take my 50% haircut and put it somewhere else where, they already have, let's say a Gemini that's earning 7% and they didn't go through all these issues. What's the incentive to make that equity really valuable and get people to
So
stay on board?
firstly, equity have to stay because it's managed through our platform. So we've created a business model that's not subject to a bank run. So that's the first thing. Then we've got your other 50%. So you will just take that wherever you want to take it. We'll put together a bunch of perks for you to stay. And we'll put together an offering, and you'll be a shareholder in the company. So you'll be supporting the own company that you'll be a shareholder in. If it turns out that other platforms are offering that type of yield, then you can create an earned security that negotiates with that platform and is able to offer a better rate. You can.
Sorry. Yeah. So the equity is going to be there regardless, and yes, you would be managing that equity. So that's a non-factor.
I wouldn't. A fund manager would. Yeah.
Right. A fund manager. So that's a non-factor whether somebody decides to stay or leave. So the only thing that would get them to decide to stay or leave is, okay, fine. I guess it helps that that you're investing in something that you're putting your money where you're invested. But at the end of the day, people want to make sure they're as safe as possible with their hard-earned money. So, just that reason alone, I don't think would get people to stay. Maybe over time, once the company proves itself, that would be enough of a reason to come back.
Yeah, and that's how we worked at Bank to the Future. We made people money, and they reinvested their returns, and then they put more in. And so when you make people money, if the fund performs well, you build back trust over time.
But initially,
if people, it doesn't matter. We would give them a bunch of perks to stay, and there's loads of perks we can come up with. Well, I gave the whole section on that. You could either do, like our retirement program, wealth management program that costs $3,000. You could give people that if they stay for a few years. You could give them a discount on their staking fees. The fact that they're a shareholder in their own company is probably a good reason to stay. You could give them, a discount on setting up their own retirement plan, all sorts of stuff. We could give them discounts on SALT loans and all sorts. Like, you can just come up with all sorts of perks to stay. Everything people want to do in a utility token, you can just give them a perk to stay.
Can we get
Sorry?
HODL socks? Can we get HODL
socks? Yeah, you can get a HODL sock.
No, I'm joking, but I just don't think that would be like, we're definitely going to lose a big chunk of the customer base if there's nothing with real teeth to keep people.
That is real teeth. So tell me what real teeth is, and we'll create it.
I don't want to make you crazy. I think just offering that profits after everybody gets paid for managing it or whatever needs to be paid out to management.
If we can find someone that's doing it, we're definitely not wanting to assume a $3 billion debt and have that as a liability. That's a big ask. There's no point in Chapter 11.
Can I ask you, objectively, if you were in
I could never get my shareholders to assume a $3 billion debt.
Understood. Okay, but if you were in Ferraro's shoes and the option was to go with a Simon Dixon, which is, yes, has maybe a clearer path to making the equity valuable, but creditors have to take a 50% haircut, or doing what I'm saying and maybe taking a little longer to go public, but really building back that credibility and incentivizing people to stay.
If Chris wanted to do that, but he's a restructurer, he wants in and out, is my perception. He's doing the job that he's meant to do. He's not trying to build a business. I don't see someone trying to build a business.
Yeah,
he's doing the Kirkland strategy. He was appointed by Alex to get release.
I mean, I would hope that there's a lot of money being spent on hopefully creative minds and at the UCC and at Celsius.
No.
I would hope
if you think Celsius is trying to represent you, that's what the UCC is there to do. Celsius is to get release, get this done with, and limit as many legal liabilities so Kirkland can say what a success they was at getting their client released. If you think that Celsius is
don't think
representing you.
You don't think that the 7 members of the UCC are motivated to get as much possible
They
back for
are.
creditors?
They're representing you, but Celsius isn't. They've got to fight Celsius. Kirkland's not on your team.
So put aside Celsius, okay? So the UCC, if you were in the UCC shoes, wouldn't you? And you were looking at
absolutely. If I could find someone that will assume a $3 billion debt, then I take it.
Well,
they should try and get it. You won't find anyone. I tried it.
We would be assuming the $3 billion debt. As the owners of the pizza shop, we would have that debt owed to us. That's what I'm saying.
Yeah,
like, why wouldn't they just try to do
is your offer is much better. Find someone that will do it.
What I mean, like, couldn't they partner with a bank or other broker dealers like you, and just give them some fees?
We could never sell our shareholders a $3 billion debt. But if you can find someone, definitely we should do it. We should definitely do it. Yours is a much better way.
Right, but you're not really selling it to your shareholders. Meaning, we're taking that debt. We're not taking it. We're losing 50% to make up instead of.
But they've got to pay you back, so it's a liability.
Right, I understand, but I'm saying, like you're saying, you have to find somebody who's willing to put in $3 billion.
Yeah, find someone. I tried.
No, I'm saying you don't need to, because you're not either doing that, right? You're not. Nobody's going to come up with $3 billion. I agree with you. There's no reason for anybody to invest $3 billion into a Celsius, the way it is today. But we're essentially taking that risk and accepting the haircut. I'm just saying, accept it as a haircut temporarily, and hopefully, if the company's successful, we can get paid back. But I don't want to keep beating a dead horse. I understand your position, and I appreciate
that's not a debt. That's the company assuming a debt.
Right, and like I said, there's a lot of companies that go public with debt on the books, and as long as a company is successful and growing and has a good team, the companies sometimes go in with debt and losing money.
Yeah, what I'll say, Jay, find it. I'll vote for it if you can find that company.
Wouldn't it be Celsius? That's the easy one.
If Celsius wanted to do that, then yeah, it would be the easy. I don't think they would.
And the court would allow for that, right?
I doubt it.
Well, I asked this question to David Adler the other night. I asked him, like, if everybody in the community would accept, basically unsecured debt and equity, would the judge still prefer having this go through a sale? And he said if the majority, I think he said that his words were if the 90%, but his point was if the majority of us creditors were willing to accept it would be very hard for the court to look away from that. Because it gives us the same option, gives us the same possibility of recovery that you're giving. Mm-hmm. Plus, potentially, if we're lucky here, we could be made whole. I think it also incentivizes people to stay on the platform. It deals with the tax issue.
You don't have a platform. You can't. If you think that Celsius is going to get licenses after this and bring out a new platform and get.
No, Celsius won't. But the question is if we can.
What do you mean we? Who's we?
A new company that basically takes over.
Then that new company has to bid and win.
But there's a new CEO.
So that company with that new CEO and that new company has to bid and win and have the licenses and put a better bid than the others.
Right, or the UCC can right. The UCC is allowed to put forward their own plan. So it's either going to happen through a bidding process or it's going to happen after that. If they reject the bids that come in, if it's not good enough, and they put forward their own plan.
Okay, yeah,
that's what I'm hoping for. Listen, it's a dream, but I think it's achievable just because this is such a unique case where you have 300,000 creditors and not a widget company or a pizza shop, but people put their hard-earned money, and it's a lot of people don't have the possibility of making that back because they're retired or whatever it is, and. I personally sold my business after 18 years last year, and thank God I got involved in crypto in 2015, and I have 90% of my net worth tied in Celsius. So to just walk away from 50% is if we have to, we have to.
You're not walking away from 50%. You're receiving a fund instead of coins.
Right, but again, the fund is today that all the assets of that fund would be worth less than the whole. So that's why if we have to, right. Okay, my second question was as far as the 2 and 20. So my understanding is that 2 and 20 structure is generally used in like hedge funds, right? Where the benchmark, I guess, is 8. Yeah, so you have, the typical return in S&P 500 or whatever over time is about 8%, and hedge funds try to beat the market, and make, 20%, 100%, 300%, depending on what, type of fund it is. So there, it's very actively managed, and you have 2% on something that hopefully is, making at least 8%, hopefully more, and I'm making 20% on the upside. I'm just wondering, like, how would it apply for a Celsius type of company where it's basically financial services? So, you have staking and lending and borrowing, where the
No,
yield is about
it doesn't do
5%.
any of that. It doesn't do any of that. It's a venture capital fund that owns a portfolio of investments, and one of those companies does staking and lending and securities. So it's not doing the service. That would be a company, not a fund. If you're a fund, then you have investments and you have assets. And to issue them to 300 to 600,000 creditors is an insanely expensive and complicated operation that would need to meet public reporting requirements. And you have, so firstly, you're going to need to cover those costs. That would be where the 2 comes in. And then whether you want to just employ a fund manager that's not incentivized to negotiate with the mining company, help them as an active venture capitalist, work with all of the different assets and try and make sure that they're maximized and sold at the right time or timed into the market or any of those things, then you don't need you could just leave the assets to try and do what they do on their own, in which case it would be a liquidity trust where they're sold as fast as possible. Or you could just not have a fund manager and see if they can just I would suggest personally, it's just a philosophy because I don't care, but I personally like to pay for the best, and the best tend to get you the result that you want. If you want to save money on it, then we can go for a much cheaper structure, but you won't get the best, and they should be able to pay for itself.
Agree, and I also agree that you want to incentivize whoever's managing the company and then the assets to do the best for us. My question is though, like, if it's not, typically the businesses
A venture capital fund, it requires a lot of work. That's a full-time job. To work with these companies and to maximize those assets is a full-time job.
Agree, but they're not going to be trading assets. Meaning,
they're not trading. It's a venture capital.
Exactly.
It's just like a venture capital. So Pantera Capital, Blockchain Capital, those types of companies, they're full-time on venture capital, illiquid assets. It's not a hedge fund.
Right, but if you look at like any of the businesses that Celsius does, let's just take Earn for example.
No, they don't do Earn. It's Earn is done by one of their portfolio companies. You need a securities business to do Earn, and they would have shares in the securities business.
So that asset, that company, let's make it even simpler. Staking earns 4 or 5%, 6%, on Ether.
Yeah, who's doing the staking?
Times. But my question is, staking is a low yield type of product. So if it's making 4% and you're giving 2%, that's basically half the profits, right?
Sorry, so you're referring to the fund being a company and trading now and actually offering service to its customers, serving outside. That's a company.
No, I'm talking.
That's not a fund.
Put aside whether it's a fund or a company, but whoever's managing, you're saying should get 2 and 20 because we want to incentivize.
No, I'm not saying it should be 2 and 20. I'm saying if you want what the industry pays to get the right people, that's what you'd have to pay. Or you could come up with a cheaper model if you want if you want to be non-competitive.
I just want it to work, and I want us creditors to get back as much as possible. So if it's like, if one of the services is staking, which only earns 4%, I don't think that service would be.
That's not so you're confusing a fund with a company. A fund owns companies. A venture capital fund owns companies. It doesn't offer services to customers. So what are you referring to? Everybody gives their ETH to the venture capital fund, and they own the asset and they receive all the staking returns.
I'm asking you how.
Yeah.
If it's
what I'm saying is
asset,
you need a custody. Right. There's a company that offers staking services. I'll give you an example. Fireblocks. Fireblocks doesn't make money off staking. It makes money off providing services to those that want to store their funds. And they, Kraken offers the ability for people to stake, and they have a business and it's their revenue and it's run by a board and they have business decisions. That's not what a venture capital fund does. A venture capital fund,
if they run their own validator nodes and that, they are taking a slice off the top of the staking rewards, mate. Whether it only be 0.5% or a percentage, they are taking a slice.
Exactly, and that's a business.
Right.
And that's
the question is,
they
if
offer
it should
to
be
clients.
2%, if you
but
take 2%
the fund
of
doesn't
the
enter
assets under
into
management,
terms and conditions with customers and offer them staking services. A venture capital fund owns shares in a company, and the company does what they need to do in order to offer their services. What you're saying is you want to create a Celsius again, and offer all of these services. You don't want the fund structure.
Right. I don't want, me personally, I don't want the fund structure altogether, but I want to understand, the
Okay, so what I think you want to do is you want everyone to give up their coins and give them to Celsius, and then they stake them and make revenue from it, and then pay you back over time.
No, I don't want any of that. I'm asking in terms of your plan, which I've learned a ton from you and from your transparency and all this. I appreciate it. So Mike,
so maybe go back to the videos. There is a company that offers equity in their company to the fund. What does that company do? It has a custody service, it has a securities business, and it has a lending company, so that company can offer all the services. The fund owns a stake in that company. It owns shares in that company. And a venture capital fund manager ensures that all of its portfolio companies are performing, and those companies have to hold themselves accountable to the fund manager. You're not putting their services in the fund, because then it's a company. It's no longer a fund. You're asking them to.
So my question is, okay, so maybe it's a misunderstanding. So my question is, the 2% is it earned on assets under management? Meaning, if right now we have $2.5 billion and we put it into these companies and it's owned by a fund or managed by a fund, what is the 2% being earned on? Is it on assets under management?
2% off net asset value, and 20% is off profits.
Right, so that's what I'm saying. So the 2% on net asset value, meaning assets under management, is a lot. You basically, 2% of what.
Sure. Do you know how much it costs to run a public company with 300 to 600,000 shareholders? The setup, I can tell you right now, you're talking a big check to manage that.
Right. The question is, does that model work for a company that has a low yield strategy, like let's say staking? If staking is earning 4%,
again, you're back to it's no longer a fund. You're now on a company offering staking services. You got to understand that if you go and invest in Pantera Capital or Blockchain Capital, they don't offer staking. They invest in companies that offer staking, and those companies are then accountable to their fund manager. A venture capital fund owns a portfolio of companies, right? So they don't offer the service. You don't enter into the terms and conditions with the fund, and they don't offer a service to you. Their customer is the investor. If you get it, I think we're going to probably move on because we put a lot of time in it.
Thanks for the time.
But a fund can't offer services because it's an investment company.
Right. Okay. Again, my question is, as a customer moving over to Bank of the Future, we'd be giving up, let's say, 2% a year to manage it?
No. If you want a fund, then you can do a 0 and 5 and have no active fund manager, but you'll never get that a public company under a 0 because there's no way of paying the cost, and you can't do it for 300 to 600,000 investors. Or you could do a 2 and 20 or something in between. I don't really care. It's just an HR strategy of how to attract the talent you want to maximize your assets. It's not Bank to the Future that receives that money. That's a fund.
Right. Understood. Okay.
Cool.
I took way too much time. Thank you, Simon.
Cheers. Thanks, Jay. All right.
Simon,
I think that's
Oh, sorry. Could I?
Okay. We'll do one more and then we'll go.
No,
okay. Thanks, Simon. Appreciate it.
I had my hand up, dude.
I was just going to ask. I'm one of the unfortunate people that had a good chunk at the.
1 second. I had my hand up.
Sorry. I'm not very good at I haven't got a co-host. I'm not very good at this. Go for it.
I appreciate you, Joe. Thanks for advocating for my HODL socks proposal. One thing we can agree on, Simon, pineapple on pizza. That's probably about the only thing. And I've tried to be amicable with you over the last couple of months and stuff, even though it's no secret I'm not your biggest fan. I have a high level of distrust for most people in this industry at the moment with everything that we've been through. And one thing you said earlier on disturbed me, and it basically reinforces my assessment of you and your business. You don't want to enter the US. And my assessment of you and your business is you bang on about regulations.
Me as an individual, but we have a US broker dealer.
As the CEO of Banks of the Future, all right?
No.
So,
we have a US broker dealer that segregates all the US business to the US. So any US
I'm talking about you and the main entity, all right? Okay. So
yeah, I don't want to become a US resident.
Well, you don't have to become a US resident, do you? But you're not actually registered in the US, and you know.
Yeah, I don't want to become a US resident or become a US taxpayer or enter into the US.
There's legislation changes in the UK in November, which basically forced you to move from the Isle of Man to the Cayman Islands. Right, so you know,
sorry,
I just
none of that's true. None of that's true.
Yeah, it is. There's a video out there of you explaining it. You know, this is why
I've never moved to the Cayman Islands.
No, I'm not talking about you. I'm talking about your business, Banks of the Future. Okay, right, and you do spend an awful lot of time over there. So just that fact that you mentioned that earlier on is like another red flag for me, because you go on about compliance and securities law and everything like that, but yet you circumvent these things by not registering your company in either one of these major jurisdictions.
You got that so wrong. You got that so wrong. What we did is we created a structure where you could comply with global securities laws.
A very, very clever structure using the tax havens, the shadow banking system.
All right. So you find a jurisdiction that can allow us to do what we do, be a registered securities business, and then segregate all of the local regulations with the local regulators. That took us 10 years to build. And all US investors sign up with a US broker dealer.
Who's the US broker dealer?
Look at our website. Look at it's BMI.
Right, BMI. Okay.
Yeah, so they're a US broker dealer that complies with US regulations and pays US tax.
But then the talk is
if you as a UK resident want to comply with US securities laws, then you can. But we created a structure where you can just comply with your local.
But you're talking about with your plan, then basically the company becomes Bank to the Future, and you retain the name, all right? Now I'm not as articulate as you because like I've mentioned, I'm just a council estate kid, dude, and I'm trying to learn and process as much of this information as possible. All right, so I find it highly dubious, though, that your entity, your main entity, unlike other companies that try to operate in these jurisdictions, actually do have an entity with that name in these jurisdictions.
Yeah, so give me an example entity.
Well, Celsius for one, all right? Yeah. Kraken for another.
Kraken, okay. How many different companies are within their group?
You know,
they've got Cayman Islands, they've got BVI. Guess who Coinbase is broker dealer? Who do you think they bought it from?
Well, you enlighten me, because
they bought it from us.
You know, and I'm also here to hold people to a high level of scrutiny too, because
look up Keystone Capital Corporation and find out how much Coinbase paid for it from us.
Into this situation, you know. So, and this is why I have a high level of distrust for most people now in this crypto space.
All right, I'm so yeah, feel free. But here's the thing: you won't. If you're a creditor, you will not need to make any decision without a full disclosure statement. But you're asking me to give that before the time is right.
But you're making it seem like we're a burden for asking questions to a person who's put themselves in the podium and is, basically asking us where to direct our money. I mean, come on, you signed up for this, so don't complain about the scrutiny. That's all I'm
not
saying.
Complaining. I think I've the only one here that's answering.
I'm not the only one that is asking a question that continues to be interrupted, and then also semantics are thrown. That's all I'm saying.
Okay, so what's the question?
That was an issue before.
I apologize. What's the question? Yeah, you've made a statement, but what's the question?
One minute. Like Keeper earlier on, when he was asking you questions, like he was very calm. He was, he's very balanced. And then you accused him of being confrontational as well. And I didn't.
Okay,
I didn't find that
it
to
was
be
just an
okay.
energy that I'm feeling, and I get the same energy from you.
Yeah, no, well, because you're being
So
questioned.
what's the pattern here? It's
You're
that
being
simple.
You're being questioned with answers which involve answers that you can't honestly be truthful about. And then it puts you on the back foot, and it puts you
All
in a
right,
defensive mode.
hold on. So
I
start
heard
with
the
the
nerves and the
question.
tension. I heard the nerves and the tension within your voice. But the question is essentially is like you go on about compliance and regulations all the time, right? But yet your business is like registered out of the Cayman Islands. And and the question
Yeah,
essentially
so
is
part of
why
our
do you
company.
not want to be like get roped into the US?
We do.
It's
We
like,
have what we do. What we do is we say that we would rather. We have lots of.
through what you call like
Listen, you're
financial
not willing to hear
vehicles.
the answer. You're not willing to
All
hear the
right, fine.
answer.
Yeah, but you also interrupt people as well. So,
Fair
but I'll
enough.
let you.
And
I'll let you talk. I'll let you talk.
all right, I'm going to answer that question. Is that your last question?
Well, that is my only question. Why do you not
Okay.
want to enter the US and be compliant and essentially,
every
bound
US
by US
investor,
regulations?
every US investor that uses our service signs up with a US regulated US broker dealer. What we do is we found out that our investors do not want to be in someone else's jurisdiction. They prefer to be in their own jurisdiction to their own investor protections. So we created that structure whereby they can be compliant with their own regulations rather than opting into somebody else's country where it's available. And we created technology for that. So what I'm saying is we're not avoiding the US. We're saying that only the US investors want to go through a US broker dealer. Our other investors don't.
Right, fair enough.
Okay.
Also, you were talking before as well about spending money to hire the best. Then I suggest you hire some better developers and get your website revamped and a bit more up to date. And
Okay,
also possibly
appreciate
hire
that.
some more customer service agents because there's people out there that have been waiting 2 months for a reply.
Okay, well, we've got about 13 tickets right now, so we're not aware, but we've got an 83% satisfaction rate. If anyone's not get that, please DM me and I'll make sure the customer service team prioritizes your ticket. If you've got someone that's in that situation, let me know. I'll make sure the team knows.
I'll find the tweet and I'll link it to you.
Perfect, thank you. All right, appreciate the additional questions. I personally believe that I've answered a lot. These are recorded. And yeah, we've certainly got improvements to do. We aggressively hiring. We're going for a scale up strategy. And if anyone would like us to do it, then you will get the choice of when we do it. If you don't want us to do it, we don't have to do it. But if we enter into a bid and reorg, creditors will get to decide. And if they don't want us to do it, then that will be your decision. Okay, thanks everybody.